Welcome to Markets Now. I'm Michelle Rook with Randy Martinson Ag, and we're seeing mostly higher prices now over in grain and livestock futures, with the exception of soybeans, which started off a little bit better, but are kind of starting to fade a bit, Randy. And we've had a pretty good run. 5 day, it would have been 5 days up here today. Are we looking a little tired in the soybean market?
I think we are. I mean, you're right. We've had a pretty good push here, and we've got up against some minor resistance levels. And with this strength, and we haven't seen a lot of demand. We've only seen China come in and buy one. So I think the market is kind of thinking, well, did we drop enough to bring in some extra buying demand or extra exports? And there's some concerns about the weather that's going on in South America right now, as they are getting rains up in the northern regions of Brazil. That should actually be supportive to the market as they're trying to harvest and plant their second corn crop. And then they're talking about some dry conditions for Argentina. But technically, I think soybeans are trying to get to the next level, but they're going to need a little help.
So where do you have chart resistance?
For the soybeans, I think we got a little more room to be able to move in this market. I was thinking we could see 35 to 50 cent pop, and I think we've gotten close to that 35 cents now. So I'd say we probably have another 15-cent move in that at this point.
Meal market is up here today. Is that concern about Argentina? Is the market really worried about it yet, or is that just unwinding of spreads with bean oil?
I think it's probably a little closer to unwinding with spreads, because yesterday we had bean oil up good. And right now I don't think it's really it's concerning, but it's not worrisome with what's going on with Argentina right now. If this hot dry lasts more than a week, then yes, I think then it gets to become a little bit more of a concern. But right now it's just something to watch.
Corn market, fifth day up here. If we close that way, do you think we are starting to confirm a winter low, or is this just correcting our oversold status?
Well, we still have to call it correcting an oversold status. I think if we can get above some technical resistance lines, I think, then we can see a little, this become a little bit more real in the corn market. The funds are extremely short. We're talking about lower acres for the U.S. in 2024. Those estimates have been coming out. Argentina, with their hot and dry forecast right now, that's somewhat supportive to the corn. As what is it? The crop is in the pollinating stage right now. So I think there is some decent news that's going on as far as corn is concerned. It just needs to get some technical support behind it. And we won't see that unless we cross over that 450 to 465 level.
We've been moving kind of sideways on a chart, though, basically consolidating here, right?
We have been. I mean, it seems like corn just can't get enough strength to be able to finish with good gains on a daily basis. We trade with gains, but by the time it's over, we're sitting with about a half cent, 3/4 of a cent gain. But I think we're building a good base. We're building a good support line in the market. And hopefully, once we do start to see a little bit of news coming from what the potential for the Safrina's corn crop is, that could bring some support and help push that corn market.
And corn's probably getting some help from the wheat market, which is up this morning. And, is that, again, just some short covering? I know the dollar's down today, so how much is that helping?
I think the dollar's helping quite a bit. We did see a little bit of headwinds coming, with, of course, Russia's coming in with higher production potential and the exports. Every time we get a little bit of good news, they seem to come with something to counter it. But, we took wheat down probably way too cheap. We're looking at less acres, although we do have a crop that is in very good shape. With farm futures numbers yesterday coming out, they were extremely friendly, I think, to the spring wheat side, cutting their potential acres by 2.1. I think that's a pretty drastic cut. Tells us that we're not looking at wheat as one of our major crops.
How much do you think spring wheat acreage would be cut here for this year? What's your guess?
My guess is somewhere between 1 to 1.5 million. I mean, we've had like 10 million something last year. So, seeing a 10% cut is a pretty big cut. So I think if we see about 1 million to 1.5 million reduction, that would be more in line with what's reality.
And I shouldn't call it a guess, Randy, because last year I talked to you several times and you actually were right on in terms of the acreage numbers for wheat. So hats off to you on that.
Well, thank you. It's, I travel the spring wheat area, so I get to hear a little bit of their woes a little more often than normal.
Yeah, no doubt. Okay, cattle market had a nice chart breakout yesterday. New highs for the move again here this morning. Can we keep going here? Because we do have the box beef values helping push us along.
I think we can. Of course, we got the Federal Reserve meeting next week. They're expecting the rates to be left unchanged now. But I do think we've got that cattle inventory report next week. The market's going to start positioning ahead of that. And right now, with the tight numbers and the fact that those numbers are going to continue to be tight, I think that'll help support this market. I don't think we're going to be done with the rally until we can get a little bit above that 50%, maybe 60% retracement of what we lost. Then I think this market's going to start looking at where domestic demand falls and whether or not we can continue to be competitive from the consumer.
When you look at demand, though, when you get stock market hitting new highs on the S&P, boy, you have to make a little bit of an argument that demand can hold together, can't you?
You do. I mean, most of the, what is it, 70% of the red meat gets consumed through restaurants, and most of that is on the East and West Coast. And, those guys that are having fun trading that S&P like to go out and celebrate after another record high. And it's likely they're eating steak. So that's helping to improve the demand.
Yeah. So, as far as the feeder market, we like to see feeders be the leaders. Do you think that's what we're kind of seeing here? What do you have to have technically to confirm that?
I think if we can get above that 50 to 60% retracement, in the feeder cattle market, I mean, supplies are going to get tighter there first. That's, feedlots are going to want to try to stay, full. The fact that corn prices are, feed prices are reasonable is helping to keep the feedlots stay, pretty full with number of cattle. So as supplies continue to be tight, I think, we're going to see that market continue to run. But I think once we get to a 60% retracement, I think then this market's going to start to stall.
Okay. Hogs were lower last week. A lot of that was due to the backup of hogs with processing being slowed due to the weather. It looks like we're starting to catch back up now. We made new highs for the move yesterday, and we started off lower but are coming back here. So do you think we can keep going in this hog market?
I think we do. I mean, one of the issues is, of course, is what China's talking about with reducing their hog herd right now because of their massive buildup. Now they're looking at pulling back again, so that might cause a little bit of a hiccup. But especially on the demand side for us with exports. But I think our domestic demand is picking up enough where it's going to be able to help carry that market, mainly because of the choices between with the higher priced beef. A lot of consumers are going towards the pork side.
Let me ask you, do you think the funds are back in buying both hogs and cattle right now? And how long will they push back in the cattle market, especially?
Yeah, I think they're back in. They're certainly participating in it, and I think it'll last until we can get probably into that April timeframe. Then we normally start to see this market level off a little bit, but I think we got a chance to see them stay in it until then.
Sounds good. Thanks for joining us, Randy Martinson with Martinson Ag. That is Markets Now.